What's up, everybody? Ryan Coyle here from Connect.ca. We're looking at the April 2024 market recap, and thank you for joining us. First, we're going to talk about the news. So capital gains has been a very hot topic that has been in the news. Many of you are reaching out to me and the team. So I just want to touch on that and what that means for real estate investors. Monthly market insights. We like to just look at a year over year, month over month, macro market insight every month. So we're taking a look at the entire GTA market. For those of you interested in micro market updates, statistics, please reach out to me or a team member. We can look at that specific market with you. For example, Yorkville, Mississauga City Center, we can break down those stats for you as well. Then we're going to look at the affordability gaps. These are two metrics that I tend to watch because they can tell a story of what direction the market might be going in. And then we're going to look at what's hot in the market today. All right, capital gains. So what does this mean for real estate investors? Well, first of all, let me clarify, I'm not an accountant, so seek professional accounting advice if you have a detailed, complicated situation. I just want to give you a high-level overview of what is happening with these changes. So as of June 25th, 2024, capital gains will increase. For personally held invested real estate, it'll go from 50% to 66.7%, over $250,000. So if you make a $250,000 profit, it'll still be a 50% taxed capital gain. So anything above $250,000 will now be a 66.7% capital gain. Now, I mean, if you're making $250,000, there's a lot to celebrate, but the tax is obviously going to cost us. Real estate investors who are investing over a long period of time and are seeing huge gains. Now, what is the difference between a corporation and being held personally? So corporations are going to now see a tax capital gains increase on every dollar. So not every dollar over $250,000, but every single dollar will be a capital gain of 66.7%. Now, corporate taxes are generally much lower than individual taxes. So for me, for example, it still makes sense to invest in a corporation. My profit will now have to pay more tax, but I will be left with more money in my pocket versus doing it personally based on my personal tax rate. Is the media showing us the right picture? You really need to understand the context behind the numbers. So a lot of people have expressed fears or concerns over this number that was, I think it was in a Globe and Mail article a few weeks ago, stating mortgage arrears are plus 26%. So if you really look at the data, what does that actually mean? So they've gone from 0.14% to 0.18%. What that means, literally 2 out of every 1,000 borrowers have gone into arrears. Doesn't mean they have gone into foreclosure. This means they've gone into arrears. Now, that is a very, very low number. In fact, it's the numbers used to be considerably higher. And one of the things we have to actually thank for that is one of the policies the government made that I think was actually an intelligent one, and that was the mortgage stress test. So in late 2017, or maybe it was early 2018, they introduced the stress test that stated that borrowers would have to qualify for their rate plus 2% or the overnight lending rate plus 2%, whichever was lower. And that would allow them to then get financing based on that qualification. So people are more qualified to borrow today. And that's why that number is historically very low today. 2024 April market recap. Let's take a look at the numbers. All right, so let's look at the Toronto Real Estate Board Market Watch numbers. These are all high level. We're going to look at the different housing types. Then we're going to look at the 416 and 905 year over year prices. Anyone who wants us to break down a specific market, a specific building in a market, home street in a market, reach out to us because there's just so many markets within markets that we can't do that on this presentation. I really want to keep this monthly market update within 10 minutes. So I'm going to fly through these numbers and please reach out if you have further questions. So we're starting to see price appreciation across all asset classes except for townhouses. We've got 2.2% detached year over year growth. 905 is 1.2, 3% for semis. We've lost 2.6 in the 905 for semis. Townhouses, surprisingly, we're seeing year over year price depreciation, which I think is actually surprising. Now, this is 1 month of data set year over year. month of April. So I'd like to see what happens next month. But when you're seeing consistent months and a pattern, that's when you can tell where the market is going. So you often have to take a single month with a grain of salt, and that might be the case with townhouses. So we're looking at condo apartments. This is not a surprise for me. We're seeing price appreciation in the 416 and some softness in the 905. I really like looking at this chart because it breaks down the number of sales, active listings, months of inventory, average prices, and days on market for the last 12 months. So where I just showed you year over year growth, we could actually see the month over month patterns. And this will give you a more telling story of what direction the market might be going in. So right now you'll see in April 2024, we're at just over 7,000 sales, which is very comparable to April last year. What is maybe an alarming number is we're seeing 18,000 new listings versus 10,000. It's almost double the amount of new listings, but sales are relatively the same as last year. So what is that naturally going to do? That's going to add more months of inventory. Now, what's really, really interesting, and a lot of people are having a hard time wrapping their head around it, is prices have remained relatively flat, and in some of the housing types have actually gone up, increased month over month, which we'll jump into a little bit further here. So this is overall price growth. We're just slightly above the year over year, but we took a run up here early last year as we thought rates were going to hold, and then rates started coming up again, and we saw prices start to dip back again. So we're starting to see prices make their way back up again. I think that's mainly based on consumer confidence. So although there are a lot more listings in the market, we're starting to see buyers come off the sidelines in specific asset classes. We're not seeing so much of that yet in condos, but we are seeing in the low-rise market more than condos. Now we're still in a healthy days on market here. The average is probably based on all of this, 18, we're currently at 19. So we're in a good position there. I always like showing the long-term market outlook. So we can see the average price change over a long period of time. This is all the way from 1980. And you can see the volatility here, the spikes up and down. And you can see right here that we've averaged 6.73% compounded annual growth over that same period of time. So the reason why this is a really telling and important graph to look at is because you can see different patterns in history. For example, this is where we saw prices shoot to the roof in the mid 80s. We probably heard people tell us about, our parents, grandparents. I've read a lot about it, but you can learn a lot from history. So what happened was that was a prolonged period of a down market. It went up so quickly, prices shot up. What comes up always comes down. But what's a lot different in these markets where we've seen these ups and downs in previous markets is the government has learned a lot from these past corrections, and they really do a good job, believe it or not, at controlling prices from taking off and when prices come down. So they'll do that through monetary policy, through government policy, taxation, different things like that. So you'll see here that we saw prices plummet here. That was due to COVID. What did they do? They dropped interest rates. We saw them come up. Now this is a short period of time from when they spiked, and then we saw them come down. So what this tells me is that we're probably close to the bottom of the cycle. I mean, many believe that we already have passed the bottom and we've started to see some month over month growth. And TREB average price. So this is a very important chart to understand and pay attention to. So as I just mentioned, we saw in COVID prices take a run up due to interest rates to spike the economy. Interest rates increased drastically, quickly, very quickly. So we saw prices fall very quickly. There's a direct correlation to interest rates. And then we saw them come up again. We thought rates early last year were going to stay still. And then they went up, prices went down. So why is this line so important? Because history over 45 years of recording this data has followed this line. So although there's going to be blips up and above and below this line, you're always going to be able to end up at this line at some point in time over a short period of time. So what this tells me here is that within probably the next 6, 12, 18 months, we know that this line is going to continue this way, and these average price will eventually line up with that. So real estate, as we always said, is especially for investing, is about holding for the long term, because we know where prices will be over a long period of time. We don't know where it'll be over a short period of time. So these are the average prices for all housing types in the Toronto Real Estate Board data. Now, I want to talk about condos, because one of the segments that was the hottest segment in Canadian real estate before the pandemic was downtown Toronto condos. That has become a very soft part of the market currently. And what's really happening in that market is we're seeing last year more completions than we had ever seen, but we're not seeing the same amount of demand. So right now there are, let's call them panic sellers, that are selling because of affordability, because of rates. Rates are way too high, so they can't afford to keep the condos or the properties, so they're selling them very aggressively. And that is bringing down the overall average, but especially for that segment of the market. So, I'll just take a step back. If you look at months of inventory, we're sitting at 2.54 months of inventory for housing types, but in the condo market, that's actually over to 4. So that's an average, whereas condos is about 4.5 right now. So the market really has to work through that supply, which I have no doubt it will as soon as rates start coming up. Condos are mainly entry-level buyers where they want cheaper mortgage rates. But what's really important for those of you buyers that are watching, and we work with buyers, we work with sellers, that affordability also doesn't necessarily have to do with interest rates. It also has to do with the price of the property. So there's no better time to actually buy right now. And let me walk you through what I mean by that. So this is an example of a building that recently registered, 8 Cumberland. These prices are being sold well below what they originally paid and well below market value for Yorkville. And what this is, it's a small few people. Not all these properties that are listed here on the MLS. There's a small few people that are pricing so low because they have to get out of the deal, because they can't afford it. So there are opportunities like that speckled all throughout downtown Toronto. Now, that number this month is way lower than it was last month. And as rates come down and demand starts picking up, I think we'll work through this inventory in a relatively quick time. But for right now, there is an incredible opportunity for buyers to take advantage of this situation where sellers have to sell. Now, for sellers, if you can, I strongly, strongly urge you to wait out this market, because that line I showed you, we know where the market is going to go, and it's probably going to go soon. Now, just to highlight the value in that project, if any of you are interested, there's many of these projects throughout Toronto, but this building, 8 Cumberland, is located in Yorkville. You could buy here for around $1,200, less than $1,200 per square foot. 2 years ago, it was $1,500, $1,600 per square foot on the resale market. This building is currently selling on the resale market for about $1,400 per square foot. It's 1 block north. So that is just one example of a new building where people took on mortgages, but they can't afford them, and they're selling them for very cheap. It's driving down a bit of pricing and some of the numbers. This is also a very important chart for buyers. So any of you that are waiting for prices to go up, or should I say rates to go down, what's going to happen when rates go down? Prices have historically gone up. There's a direct correlation. I showed you that in that chart. When rates went up, prices went down, and vice versa. So it's an inverse correlation. So let's just give you an example. If you were to if you were to have bought in February 2022 at that one spike that I showed you, that same property today would most likely be worth around $800,000. So you would have bought then at a 2.5% interest rate. Today you'd buy at a 4.5%, 5%. Down payment would have actually been a lot higher back then, so you'd save $40,000 there. Land transfer tax, you're saving money there as well. Now the mortgage payment, because you're paying for the same property, a lower purchase price, putting less money down, is relatively the same. So that is why I urge anyone wanting or waiting to get into the market to get into the market right now, because there are advantages, a $200,000 advantage in this case. This is a similar slide that highlights what buying now will look like in the future. So if you take advantage of buying now, and this is based on that line where we've seen history repeat itself over and over again. Buy today a property at 1.18 million. In the near future, that's 1.265. So interest rates today are 5.6% or 5%, but in the future, we believe in the near future it'll be 4.25%. This is just for the sake of an example. I don't know exactly what the rates will be, right? But so today you could put down a lower down payment versus waiting, which many people will wait because they want lower rates. They want to know the market's going up, so they want to buy when it's going up, where you can take advantage of buying right now at the bottom. There's tremendous amounts of opportunity out there. And your monthly mortgage payment, relatively the same with the higher rate versus paying $200,000 more and getting a lower rate in the future. Future supply of new construction, supply. So I keep mentioning this, I just mentioned it. It's very important for sellers to be aware of what the future supply looks like, because supply and demand is what's going to drive future prices. And the supply story has never been darker in the city of Toronto, or the GTHA, which this is for. So this is a slide that I put together, compliments of Zonda, providing the data, and it's just showing the amount of completions and units that are going to be delivered. And you'll just see how that just drops drastically. Now, some of this 35,000 units that hit the market or expected to hit the market will get pushed, and this will get pushed further down. But we're going to start to see record low deliveries, completions by 2028. I actually saw a number we didn't include here. I saw it just yesterday when I was doing research. 1,900 completions are expected for 2029. 1,900 new condos. New constructions, not just condos. So anyone who can weather this storm, there are going to be very good opportunities for investors and price appreciation in the very near future, based solely on supply. This is a really interesting chart that I like to follow as well, compliments of Urban Toronto. So they created this new crane study that they've been doing now for about a year. And this is a visible sign of lower supply. Number of GTHA cranes showing a slight but persistent downward trend. So these are the amount of cranes that you see when you're driving downtown Toronto or wherever, and you see cranes in the sky. I went looking for this data because I was driving around Toronto last week trying to count cranes. There are way less cranes than there were 6-12 months ago. They're not everywhere anymore. And that's really interesting. I mean, you can look at the data all you want, but when you're actually out there in the field and you're seeing things, you have to look a little deeper and look between the lines, because I believe that this is a direct sign of fewer units hitting the market than were originally anticipated. We've had buildings that have canceled. We've had buildings that are even started construction that have stopped construction. So there's a lot of different things that are going to drive down even this year's completion and next year's completion. So we'll have to watch that closely because we don't really know what that number is. But this is an important sign. So you'll see cranes, drastic drop just this year. It's going to keep going down. All right, let's look at my key indicators, the affordability gaps. I love looking at this stuff. So gaps can be a leading indicator of what's to come. Now, just looking at 1 month of data doesn't always tell you a full story. So you want to watch this month over month, and you can usually see a trend. You can see where prices are going to go for the different housing types. So this is really interesting. The average price appreciation for a detached home in 416 is currently 1.82 million and 766,000 for a condo. That's a difference of over $1 million. That is the first time since I've been doing this that is over $1 million. So typically what that'll mean is when people move to Toronto, everyone wants to buy a house with a backyard and a pool. They can't afford it, so they'll end up buying the next affordable home, which is typically a condo in downtown Toronto. And then you can assume if they can't afford in downtown Toronto, they're either going to be a renter, but if they want to be a homeowner, they're going to move to 905. So this is another affordability gap we like to look at. And we like to look at the gap between 905 and 416 because the assumption is that majority of people work and want to live in downtown Toronto, but because of affordability, they get pushed out. This gap was very narrow last year, and we were talking about that, and we actually got a lot of buyers into the market in Toronto, And since then, we were actually right by looking at this data, because prices in 905 condos have actually gone down, whereas they've slowly started going up in Toronto. Now the gap's gotten bigger, so the affordability gap is quite wide, and 905 condos are now looking like an affordable option for some entry-level buyers and owners. All right, what's hot? So Secret Garden is a development in Punta Cana, Dominican Republic by Novell Properties. Many of you know I've now been investing in condos and pre-construction in Dominican. The cash flow projections are amazing. The capital appreciation is amazing. The incentives, the tax incentives. There are many, many reasons why I'm now diversifying over there specifically. This is one project that we are currently promoting. Many of our clients have invested here, very close to the beach in Bavaro, the hot area of Punta Cana. Reach out to me if you guys have questions. There's some really, really great opportunities in Dominican. Cliffside Condos by LCH Developments. This is actually a stunning building. It's located on Kingston Road in Scarborough. A lot of the views to the south will have water views, and they're doing a very low deposit, 10%, 15% deposit, I should say, but they're giving 10% interest on deposits. So that's a really great opportunity. Now, what's coming soon? Rain by Lamb Developments. It's coming to Streetsville, Mississauga. So any of you watching this that are from Mississauga, you know that Streetsville is a very high demand area, and they have added relatively no new homes or condos in the last many years. So this will be a really interesting project to launch. I think it's going to do incredibly well. That's in Streetsville, Mississauga, launching in June. 1989, my last developments in Burlington, close to the Burlington waterfront. This is a great project, and we're excited to learn more about that. And assignments. So any of you interested in buying or selling, please reach out to our team. We can price out your unit, give you the best idea of what we think we could sell it for today. Any of you thinking about buying, there are some incredible opportunities currently available in Toronto that we could share with you. We've got many assignments and where buyers want to get out of their contracts, and there's also opportunities in the resale market. This particular unit, actually, we just sold. It was Nobu Residences, 2-bedroom, $749,000. That is now sold conditional. Guys, I just flew through this. I want to do market updates at a very high level. What's really important is reach out to us if you want to understand what your condo is worth, what your home is worth, and you want a market update for your specific micro market. We'd be happy to do that. And reach out if you have any questions about any of the opportunities that we discussed, and we're always here to help.